Good morning and welcome to IG's early morning call on Monday, the 9th of October. I'm Angela Barnes. Well, coming up on today's programme, oil prices rose more than 4% in early Asia trade, with analysts warning of more volatility due to the Israel-Hamas conflict in the Middle East. Equity markets, meanwhile, are expected to fall today as investors look for safe haven assets. Gold is up 1% as a result. Also today, US earnings season gets underway this week. We'll be hearing from the big banks on Friday, with JPMorgan Chase, Citigroup and Wells Fargo all reporting their latest earnings. Okay, well, let's start by taking a look at volatility this morning and taking a look at the VIX chart. Well, it's up 3.61% as the markets were expecting on the day, at around 1910, with the trouble in the Middle East adding to market concerns. Well, there was also a surprising jump in US jobs on Friday, with non-farm payrolls increasing way more than expected, nearly double the 170,000 expected. This strengthened views that the US Federal Reserve policymakers will need to keep interest rates elevated to cool inflation. Well, 10-year yields surged back to 4.81% as well on the back of this release. It's the highest job number since February and means the US economy has added net new jobs for 33 consecutive months. So traders have now shifted the full pricing of a rate cut further out to September 2024 from July. Well, the volatility index on Friday approached a high hit earlier in the week, not seen since the end of May, before reversing. Well, still, the index's level, though, does remain off the past 20 highs seen in May. Well, moving on, and it's 30 minutes roughly to go until the European markets open. So let's see how things are looking pre-market. First of all, starting with the FTSE poised to open higher, up 0.17%. France's CAC 40, however, due to open in the red, currently down 0.18%. And Germany's DAX also poised for a lower open, down 0.34%. Well, European stocks did finish in the green on Friday as traders reacted to that stronger US jobs data. The pan-European stock 600 was also higher, with retail stocks leading gains. However, that surprise attack by Hamas on Israel has sent shockwaves through markets, with investors turning to safe haven assets. Before we go on to that, and we will look at those safe haven assets considered in a moment, but let's have a look at overnight in Asia. Because, well, Tokyo and several other Asian markets were closed for holidays on Mondays. Hong Kong's market was also closed due to typhoon warnings. But let's have a look. The Nifty 50, India's Nifty 50, down 0.53%. Singapore's STI down 0.10%. And Australia's S&P ASX 200 was up, however, by 0.23%. Well, Chinese stock markets, meanwhile, did recover gains on the return of the Golden Week holiday, given positive signs in consumer spending. Tourism revenue from the week rose to $103 billion, with spending jumping 130% from the same period last year, with the country, well, that was when the country was in the strictest COVID-19 lockdowns. Well, China will report a raft of economic data this week, including CPI, PPI and trade balance data for September. So we'll be keeping across that. Now let's move on to Wall Street and see how the US stocks closed on Friday after that US jobs data. Well, the Dow Jones Industrial Average up 0.87%, S&P 500 also up 1.18%, and the tech-heavy Nasdaq also climbed 1.60%, and that's after that stronger than expected jobs data in September. Yields initially surged also after the jobs report, with the 10-year Treasury rate trading near its highest level in 16 years. Technology shares, though, led the S&P 500 sector gains on Friday, gaining 1.94%. Advanced micro devices among them, jumping more than 4%. Meanwhile, Ford advanced and GM gained nearly 2% after the United Auto Workers Union said there would be no new strikes because of progress in talks with automakers. Well, let's have a look at how Wall Street is poised to open today because they're all session stocks on the IG platform. US early trade. We have got the US 500 poised to open marginally lower. Also, the NASDAQ down nearly 1% as well, set for a lower open also. And then the Dow also marginally poised for a lower open, down 0.5% as it stands. Also, the Middle East conflict prompting investors to move away, as mentioned earlier, to safe haven assets at risk. That sentiment there seeing across the markets this morning, a lot of red. The immediate reaction was a flight to safety across multiple asset classes, with the US dollar, crude oil, gold and bonds all rallying, while the S&P futures fell 0.90%, giving back, as you can see, a good chunk of Friday's gains that was made. Well, this week as well, traders will be keeping across German industrial production, US inflation and UK GDP figures. So talking about the different markets that have been affected by this conflict in the Middle East, let's have a look at commodities. Let's start with crude oil, US crude oil, because oil prices jumped more than $4 in early Asian trade overnight, and the markets were expecting that knee-jerk surge in crude prices today following the attack on Israel. Both Israel and Palestine are not major oil players, but the conflict sits in a wider key oil producing region. Well, if we look at the price of US crude at the moment, it's up 3.43%, trading around $84 a barrel. And then if we cross over to Brent, also up 3.25%, trading at around $86 a barrel. So off that $90 barrel mark that we've seen in the last couple of weeks. However, crude oil prices do remain elevated. They recently hit their highest level in more than a year before pulling back. As I said, in the last couple of weeks, global oil inventories, they've been low, and production cuts by Saudi Arabia has also continued to support prices. Last Friday, Baker Hughes' total rig count fell further as well to 619. The number of oil rigs in operations fell by 5 to 497, a new 19-month low. Well, staying with commodities, but let's move on to the precious metal gold. Talking about that flight to safety, unsurprisingly, investors are looking to it, and it's regain its that safe haven status, currently up nearly 1% this morning amid the escalating tensions in the Middle East, driving a potential shift in its price trajectory. Last week, the precious metal plunged as bond yields jumped, and against a firm US dollar, it found support though at around 1848, but posted its biggest weekly decline since June 2021. A strong dollar, coupled with a potential interest rate hike by the US Federal Reserve, however, could deter investors from gold, exerting downward pressure on its price. Well, moving on. We mentioned it earlier, US data showed job growth was stronger than expected in September in the US. Non-farm payrolls increased by 336,000 for the month, better than the Dow Jones consensus estimate of 170,000. The unemployment rate was 3.8%, marginally higher than forecast. Now, if we turn to the US dollar basket, well, it initially rose after job reports, but fell to a one-week low. On the bond market, yields followed a similar path, surging after the jobs report, with the 10-year Treasury rate, as mentioned, trading near its highest level in 16 years. The benchmark rate later eased from those levels, but was still up around 6 basis points at 4.78%. Well, what about statistics and economic data this week? Well, investors will be attentive to a few macroeconomic indicators on both sides of the Atlantic, which could cause sterling to react. To BRC retail sales monitor, which will be published at midnight tonight. The pace of retail sales growth is expected to slow in September to 2% after a 4.3% increase in August. Also, on Thursday, the market forecasts a rebound of UK monthly GDP for the month of August after it dropped by 0.5% in July, month over month. Also on Thursday's agenda, industrial production and a trade balance update. Well, over in the US, producer price index and Federal Open Market Committee minutes are also due on Wednesday, before arguably the main macro event of the week, the consumer price index. Investors expect the pace of CPI growth to slow to 3.6% year over year after 3.7% the previous month, while core CPI is expected to fall to 4.1%, its lowest since September 2021. Also this week, US earnings season gets underway, providing the main driver of activity for the next month, or so in equity markets. On Tuesday, let's start there because, Wednesday, we've got PepsiCo reporting its quarterly results. And Pepsi has a good track record with earnings, and another beat is expected. And it's been performing well in a challenging environment of high inflation, but of course, with that, not without challenges. So let's have a look at the stock chart for Pepsi. If we just pull that one up, first of all, just switch over to it now. Well, Pepsi stock has not performed so well after the last 3 months and is down 14% from its 52-week high. It could be that consumers are squeezed by inflation, as noted, with investors worried it will lose customers to discount brands, those white labels instead. It did see a decline of 3% in its food segment and 1% in its drinks segment in the second quarter. So volumes will be one to watch. Investors may also be cautious of its balance sheet. At the end of the second quarter in 2023, Pepsi had $37 billion of net debt. And that's about 6 times its long-term average annual free cash flow. Well, also on Thursday, then moving on to Thursday, US airline Delta will be reporting its third quarter results. Delta, an all-session stock on the IG platform. Let's just take a look at the chart. Here we are. Okay, so currently up nearly 2% ahead of its latest earnings this week. But since its last peak, and that was on the 20th of July, there you can see it's lost actually about 26%. Well, investors will be paying attention to engine recalls after RTX Corporation announced that 600 to 700 Pratt & Whitney engines will be recalled from this year through to 2026, and that led to an average of 350 aircraft being grounded every year. That's what it will lead to. Well, Data has deployed around 100 aircraft with the engines, which makes it the most impacted North American airline from this negative development. Well, also operating margins will be watched as consumer spending remains under pressure, although across the board, the travel market has remained robust. Well, then moving on to Friday, and it's the turn of the big US banks. So we've got the banking sector will grab most of the attention. Of course, JPMorgan Chase, Citigroup and Wells Fargo are due to report quarterly earnings. They're expected to post lower profit, though, in Q3, apart from one, JPMorgan. If we look at the price chart, the stock is on an all-session stock on the IG platform, also up 1.54% on the day. Well, since a peak at the beginning of August, its shares are down, though, about 11%. But since the start of 2023, its share price, however, has gained around 11%. Well, that's all we've got time for this morning on IG's early morning call. But do tune in to our afternoon shows. We've got the look ahead, and we've also got Beat the Street ahead of the Wall Street Open with IG's Angeline Ong. Thanks for watching.